What's up, you guys? Yes, so welcome to our first recording or our first video on the Asia session liquidity fee, which I recently posted on my stats some time ago. Yeah, so this is our first age in the market, and this is exactly what retail traders like us. Like anytime when most traders are coming to the market, we are often taught the classical support and resistance method, which is buying at support and selling at resistance. Yeah, so during the Asia session is quite known for its ranging, or it's quite known for consolidation. This is a period where the market consolidates a lot. So if you have been trading for a while, you are going to notice this. Yeah. So with this edge, we have just three steps, which I obviously want to go over, and then we going to talk about, and then we obviously go about some examples. Yes. Yes. So this is it. This is a graphical representation of it. We have the Asia session high, and then we have the Asia session low. So now above the Asia session highs and the Asia session low, we have liquidity sweeping and liquidity rising above these areas, because we have some forex traders who are going to sell at this place, and then we have some retail traders who are going to buy at this place. So most often we wait for the market to get to this level in order to short. But me, I don't do any of that thing over here. So what I'm waiting for is to wait for it, is to wait for the liquidity sweep. So we have our first step here. Wait for a sweep of the high or low of the Asia session range. Then I'm saying that, which I obviously said earlier on, that liquidity will rest above and below the highs and the lows of the Asia session. So we have liquidity here. We have liquidity here. So that is the first thing I wait for. Either the market breaks to the upside or the market breaks to the downside. Now, if the market breaks to the upside, then the whole day I'll be looking forward to short, or I'll be looking forward to sell. Because what I believe is that the Asia session has been swept. The liquidity that is resting above here has been swept. Yeah. So we wait for where the money is, and then we join the institutions to push the market to the actual direction where they intend to send the market to. And then, so that's the first step. Wait for the sweep, and then the second step, wait for a change, a shift in market structure. So this is a curve representation of it. So at this point, the market is making higher highs, higher lows, higher lows. So once we see a break of structure, and then our buyers change, and then they will start looking for a sell. So this is the market, this is the changing character. So we essentially do this on the lower time frame. So that's the second step, and then we sell or buy into the opposite side of the market, whether the session low or the session high, depending on whether we are buying or selling. So that's it. And then these are the pairs I obviously trade. I trade a GBP pairs, because this is the time I trade the GBP pairs and the JPY pairs, and then the Euro dollar, because they are the most volatile pairs in the market, and then where the liquidity often take place. Yeah, so that's the Euro dollar, the GBP USD, Kiwi, Cable, yeah, whatever. So that's pretty much it. When it comes to money management, the maximum stop loss I'm often targeting is the 6 pip stop loss. When it is above 6 pip stop loss, it's either I use a premium and discount pricing, or I just stay out of the market, because I'm just trying to get a high risk to reward trade. And then my minimum stop loss per trade is like 3 pips or 2 pips, and then I risk just 1% of the trade. You don't have to risk a whole lot of your account. This is what causes a lot of people not to stay in the market for so long. Yeah, so that's it. That's the process, that's everything. So it's just three processes, and it has to be followed over and over again. So even if one step is missing, sometimes the market is ranging all over at this place. Still, there's no breakout yet. There's no breakout of the session yet, and then people are just trying to still get into the market. No, what I'm waiting for is for is to wait for the sweep, whether it sweeps to the upside. When it sweeps to the upside, often it will form the high of the. When it sweeps to the upside, it often to form the high of the day. Then when it sweeps to the downside, it will often form the low of the day. Yeah, so that's pretty much it. Yeah, so let's go over some trades I took. Yeah, I took. Yeah. So starting from this trade here, what now? This is a graphical representation of my Asia session high and low. I use an indicator which is the Asia session range, the FXN. That is the one I use. Yeah. Yeah, so always when I'm coming into the market now, I only trade this from the London session to maybe to the New York session. That's the only time I'm looking forward to trade. But often this is going to occur in the London session. So now you see the market go to the downside. So in this type of market, what I'll be doing is to be looking for a buy because the market swing to the downside because this liquidity, the liquidity that is facing over there. See, the market was just ranging and there's liquidity all over this place. So when the market sweeps to the downside, what I do is that I find the low that created it, and then I find the high. My high, I go by candle break approach. This candle did not break the previous candle high, so we are still going. We will go until a candle break the previous candle. So which is here, because it's obvious. None of this candle high was broken. None of this candle high was broken. None of this candle high was broken. None of this candle high was broken until this place where we get a clear break of structure. So we use the highest wake of the move. Yeah, so that's it. So at this point, we are waiting for a change of character. Yeah, so we break to the downside here. We break to the downside here, and this is the low that was formed. This is the low that was formed. Now when you are making the highs, we expect this high to break. When this high is breaking, when this candle's high is breaking, that is when my low is confirmed. Yeah, so we've broken structure to the downside. So what we will do is that we move back in time. We always move to the historical data of what has already happened. So we move back. I'm waiting for a break of the previous candle high. So here is it. Yeah, that is pretty much it. Yeah, so we are waiting for this. This is our expectation. We expect this high to be broken before we start looking for entries. But now looking at this clearly, this low was broken, and then this is a confirmation of that low. So we move back in time, which high was broken, which high was broken, which high was broken. This candle high was broken. So then this one becomes our high. Yeah, this becomes our high. This becomes our high now. Now let me see. Was it breaking? Was it broken? Was it broken? Yeah, so that was broken. So this then becomes our confirmed high. So we are waiting for now. What we are going to do, we are going to wait for a change of character. Now, this is the first sign of the market makers coming into the market. There's a break of this structure. Sorry, sorry, my mouse is fucking up. Yeah. So this, yeah. So there's a break of structure to the upside here. So this is the time where I start to look for entries. So what was the last bearish candle that caused that break of structure? It's obviously this candle. With impulses and all that. This candle. So I'll just place my entry on that last candle that caused the break of structure, and then I'll put my stop loss beneath that other block. Then I'll be looking forward to target the Asia session high. session high, but a whole lot of time it is not going to get there. So I encourage you to be taking partials and all that. Yeah. So that's it. You can see that it's clearly returned back and hit our stop loss. But this will be my break-even point, because now after this we expect the market to make high highs, high lows, high highs. So you could have taken another entry at this point. Taken another entry at this point. Now this is the safest entry. It's not always going to happen, but this is the safest entry because at this point, this is this point is going to be the confirmation of the changing trend. Yeah. So, but I don't usually start my trades here because I take one trade at a time. So this will be my break-even point. Once the market crosses this place, then I'll just move my entry to the entry. I'll just move my stop loss to the entry point. So this trade would have taken us out at break-even. And let's say if we were taking partials regularly, and then this is 5%. Just up to this level is 5%. Yeah, which will obviously make a lot because you need just 8% to pass my first funds challenge. So that's our first trade. It took a break even. Now let's move on. Let's move on to the next day. Now the next day, too, we have this price action. This bit of price action here. Yeah. So we are obviously waiting for the break of. We are obviously waiting for the liquidity sweep, which is our first step. So now when I come into the market, the first thing I look for is the high that was created after the sweep. Then I'll just move back. I'll move back in time and find the low that created it. This candle low was broken. This candle low was not broken. This candle low was not broken. This candle low was not broken. This low was not broken. This low was broken. Until this place where this candle low was broken. So this becomes my low. So what I'm expecting, my expectation is that the market should obviously break this low. When the market breaks this low, that's when I'm looking forward to coming to the market. So until this low is broken, I'm still sitting on my hands looking for my entries. So you clearly see that this is our intent. It's our intent. At this point, you know the market makers are coming to the market, but it's not confirmed until the next break of structure. So if depending on risk appetite, you can decide to enter at this place, or you can just wait for a shift in market structure. So this is a low that was created. This is a low that was created. The key thing to take here is that we move back, we move back until the high is breaking. So this is where a high was broken. So then this becomes my high. Then we go back, we find the last candle which had some impulses or which has some imbalances. Now imbalance is pretty much an inefficient price action. So with this trade, I could have taken an entry here, which is perfectly fine. It's a valid entry. This is a valid entry criteria. And you see, we took a loss here. So if I was risking just 1%, then I would have taken a loss, which is fine because an edge is not always going to play out. You are going to have some losing streaks. You are going to have losing days. But in as much as we are following our plan, our trade plan, we know that you are going to be net profitable in the end because this is a positive because our trading edge has a positive expectancy. It's a high risk to reward ratios. Yeah. So that's pretty much it. So we see that this high was clearly taken out. So now our trend changes again. Then we find our high. We are still looking for sales because the market the liquidity was taken up at this point. So we are looking for sales. So we move back in time. Which loss? This low was not taken. This low was not taken. This low was not taken until this place where we had this low, which was taken here. This candle took the previous candle low, so this becomes a confirmed low. Now here's it. This is what I mean by the candle break. This low was clearly broken by this candle low. Yeah, so that's it. So now we are still waiting for this low to be taken. Then it was clearly taken at this place. The low was clearly taken at this place. Yeah. So now we can start looking for entries again. We find the last opposite candle that caused a break of structure. This was the last opposite candle. This was the last bullish candle that caused a break of structure. So we find it and then we put our entry on it. Now here is it. And then that's a 2.7 pips stop loss. Then what is our target? Our target obviously would be the Asia session low. Asia session low. Yeah. So imagine if you took a minus 1 hour, a negative 1% here, and then you are getting. Let me do it well. Let me do it well. The stop loss has to be above the other block. Yeah, we call them other blocks. Yeah, so that is a 23%. You lost 1%, you are making 23%. Now if you had the courage to hold the position up to this level, you had the courage to hold the position up to this level, which I would obviously not, because my target is that is a 68% mark. You just need 8% to pass my first one challenge, and that is a 68% if you are risking 1% per trade. But I would obviously target this place. This is still enough to pass a challenge. This is still enough to pass my first one. This is still enough to pass any profit, but FTMO whatever. It is 25% because FTMO is just 10%. My first one is just 8%. We just need 10%, and we are making 25% on one single trade. Yeah, so that's pretty much it. The same entry criteria. So let's move on. Let's go over the last one. Yeah, I think it's here. Okay, the last one. The same thought process, the same steps. So the last one we have a low obviously was broken to the downside, so we're looking for buys. This is a low that was created. So then we move back in time. Was this candle, previous candle has broken? No, until this candle where we had this break of structure. So now this becomes a high. What are we expecting? Our expectation is that this high should be broken before we start getting into the market. Now this candle was clearly broken to this place, to this level. Then we move back in time to find which low was broken. This candle low was clearly broken here. So now this becomes it. And then we find the last candle that caused the break of structure, this structure, which was this candle, which clearly was this candle. So then we set our order. Here, which eventually, and then we target the high, which eventually turned out to be a loss. Guys, come on. No. I think there's a mistake here. There's a mistake here. So you have to be very careful about some subtle moves. Which yes. So this was the low. You can see there's a clear break of structure here. So guys, you have to be careful about this break of structures, because as every candle has a lot of information. So this was obviously the low that was created. So you have this low here. We move back in time to find a high that was created. So we have this high which was created here. So we are still in a downtrend. We are waiting for a change in market structure. So you can see clearly here that this structural point was broken. The structural point was broken. The structural point was broken. So we find a high. The breaking of this low is a confirmation of our high. So we find our high here, and then we move back in time to find the low that was created. Now this candle was clearly broken here. So now this becomes our low. Then we find the opposite candle that caused the break of structure, which was obviously this one. So at this point, I'll be placing my trade. At this other block, this last opposite candle that caused the break of structure, and then my stop loss will be beneath it. Now this thing is going to come up a whole lot of time, but which is obviously it's okay as long as we are just losing 1%. So this came to hit our TP and even move up further ahead. So this would have been a 53 risk to reward ratio if we continue holding it. But of course my target is usually the Asia session high. So this would have been, let's say, a 24 risk to reward ratio trade, which is perfect. But let's look at something here. Now this thing comes up a whole lot of times, and it is very, very, very frustrating. This will come up often. It's very frustrating, but the market can decide to do whatever it likes. So we would have been taken out of break-even. We would have been taken out on a loss if we were obviously on this trade, which is fine. This is going to happen. You just have to psych your mind for it. I would have been taken out. Let's see, take us out and then move straight up to the take profit. Move straight to the take profit. So guys, this is going to come up a whole lot of times. It's going to come up a whole lot of time. So this is our edge. Let's go over it one more time. Yeah, so the gems FX edge one. So we don't trade in the Asia sessions. This is often going to happen in the London session. We wait for this Asia session sweep. Which is the first step. Wait for a sweep of the high or low of the Asia session. Now we are saying that liquidity rests above and between the highs and the lows of the Asia session. So if the market breaks to the upside, I'll be looking for it to sell. If the market breaks to the downside, I'll be looking for it to buy. Yeah, so once there's a sweep, then I drop down to my lower time frame, which is the 1 minute. I often use the 1 minute, sometimes I use the 30 seconds, but that is up to you. You can decide to use whatever time frame you use, but just make sure you are using a lower time frame, which is either the 1 minute, the 5 minutes, or the 30 seconds, or the 15 seconds. You can even use the 1 second if you are quick enough, if you are fast enough. You can use the 15 seconds, you can use the 5 seconds, any time frame you want. But just make sure it's a low time frame. Yeah, so on the time frame, just wait for a change in market structure. This is what we call the change in market structure, and this is market structure shift, because this one, liquidity rests above the highs and the lows of the market. So there's liquidity resting above here, there's liquidity above resting here. So this could just be a liquidity grab so that the market continues to move to the upside. So it is valid to take an entry here, but this is the safest one. This is the safest one. But if you are often going to focus on the second entry, then you are going to miss some trade sometimes. You're going to move sometimes, because sometimes the market will just move, will not come to the next order block here. So me, I just take the risk entry. This is the risk entry. I just take the first one. Sometimes there will be a change in market structure, and the market will just continue moving out. This is what we call liquidity gap, which I'm going to go over sometime. Yeah. So it's perfect to take an entry. Then I target this one. I target the love. Yes. Yes. So this is the most important thing. This is the most important thing to me. Yeah. So that's pretty much it. I've gone over some traits. So guys, at the end of this, you see that we are going to be net profitable in the end. Yeah. So that's pretty much it. So thank you guys for watching my videos, and then I want to bring you more and more exciting videos. So we can obviously go about my Edge 2, which is high time frame point of interest rates. So this is what I'm often looking at. I find my point of interest, and then I just wait for market structure on the lower time frames. Yeah, we're obviously going to go, but this we have an we have an entry point here. We have an entry point here, just like we're doing on this. This is our first entry. This is our second entry, and then this is our POI. POI is simply point of interest. Yeah. So we will leave this one for some other time.